Have you noticed that fuel prices are slowly creeping up again? Every time you check the news, you hear one phrase repeatedly: oil prices are rising. But why is this happening now, at a time when the global economy is still trying to recover and people are already struggling with high living costs? Today, let's break down the real reasons behind the latest spike in oil prices in the simplest and most human way possible. First of all, oil prices move like a heartbeat. They go up and down based on demand and supply. And right now, demand is quietly rising again. Many countries that were slowing down economically are suddenly showing signs of recovery. More factories are working, more goods are being transported, and more people are traveling. When economic activity picks up, fuel consumption automatically increases. So even before we look at global politics, the basic reason is simple. People and industries are again using more oil than before. But rising demand alone doesn't push prices up this sharply. The bigger reason is supply. OPEC+, a group of major oil-producing countries, has been deliberately cutting oil output. They do this to maintain higher prices. When they pump less oil into the market, the global supply tightens and prices rise. Recently, OPEC+ extended and even deepened production cuts. That means fewer barrels are coming into the global market every day. Even though demand is rising, supply is being restricted. And whenever demand is greater than supply, prices jump. Another major factor is geopolitical tension. Oil is one of the first commodities to react when there is political conflict anywhere in the world. Recently, tensions in key regions, especially in the Middle East, have increased uncertainty. Even if oil production is not directly affected, just the fear of disruption is enough to push traders to raise prices. Markets hate uncertainty, and uncertainty around oil-producing regions always leads to price spikes. But it doesn't end there. The cost of shipping oil has also gone up. Disruptions in major shipping routes, especially through the Red Sea, have forced oil tankers to take longer, more expensive routes. That means higher transportation cost per barrel. And when transportation costs rise, the total cost of oil rises too. Companies don't absorb these costs. They pass them on to consumers, which again pushes prices upward. There's also the influence of global financial markets. Oil is traded like any other investment asset. When investors believe that oil prices will rise in the future, they buy more oil contracts. And when a lot of investors start buying at the same time, the price rises even faster. Right now, investors expect the supply cuts and geopolitical tensions to continue for months. So they're betting that oil will become even more expensive. Their buying activity itself pushes prices up today. We also have to consider inflation and currency value. Oil is priced in US dollars, so when the dollar becomes weaker, countries can buy oil more cheaply. But when the dollar gets stronger, oil becomes more expensive for most of the world. Recently, the dollar has strengthened, making oil costlier for countries with weaker currencies. Even if the price of oil doesn't change in dollars, it becomes more expensive when converted to local currency. Another reason is refinery capacity. Even when crude oil is available, it has to be refined into petrol, diesel, jet fuel, and other products. Several refineries across the world have been undergoing maintenance or facing shutdowns. When refinery capacity drops, fuel supply tightens. That means even if crude oil supply is stable, the final products that people actually use become limited. And when fuel supply is limited, fuel prices rise, sometimes even faster than crude oil prices. Climate events also play a small but significant role. Hurricanes, storms, and heat waves often disrupt oil production in major regions like the Gulf of Mexico, or they interrupt refinery operations. These short-term disruptions create sudden scarcity, which again pushes prices up temporarily, adding more pressure to the upward trend. So when you put everything together, rising global demand, tight supply because of OPEC+ cuts, geopolitical tension, higher shipping costs, investor speculation, currency value changes, and refinery issues, you get a perfect storm that drives oil prices higher again. But what does this mean for everyday people? Higher oil prices don't just affect your fuel tank, they impact almost everything around you. Transportation becomes costlier, so goods in the market become more expensive. Airlines increase flight ticket prices. Shipping companies increase delivery fees. Even electricity bills go up in some countries. In simple terms, rising oil prices directly push inflation higher, and that affects every household, especially those already struggling with high living costs. Many governments try to control inflation by cutting taxes or giving subsidies, but this can't be done every time. When oil prices rise sharply and stay high for a long period, it puts enormous pressure on national budgets. Countries that import most of their oil suffer the most, because they have to pay more dollars for the same amount of fuel. Experts believe that unless OPEC Plus increases production or geopolitical tensions ease, oil prices will remain high for the next several months. Global demand is not expected to fall anytime soon, especially with countries preparing for holiday travel seasons, industrial rebound, and increased energy consumption during the winter. So the upward pressure on prices is likely to continue. In the end, the best way to understand oil price increases is to remember one simple rule. Oil is the backbone of the global economy. When anything affects oil, whether it's politics, economy, climate, or finance, the entire world feels the impact. And right now, all of the major forces are pointing in one direction, and that direction is upward. So, the next time you notice fuel prices rising, you'll know it's not just one reason. It's a chain reaction powered by global demand, restricted supply, world politics, shipping routes, investor behavior, and currency fluctuations. This is why oil prices are rising again and why they may continue rising in the near future.